And let's connect with Sandip Sabharwal as well, who's joining in on the show. Sandeep, so much to talk about. But before we get stock specific, just come in on the overall carnage that we witnessed for the market. And it has been days of selling pressure. Of course, yesterday was a lot more pronounced. Where does that take us to from here?
So it's very clear that this money shift from foreign investors is happening from India to China as the Chinese market rallied, and there is a FOMO effect playing out among many foreign investors who have obviously missed out that rally because everything happened so suddenly. Now, the valuations of the Chinese markets are still 50% that of India, although the growth prospects are still much slower in China. So it's a possibility that we could see more uh, allocation shifts from India to China because they are the top two allocation in the emerging market basket today. On top of that, we have the geopolitical issues, which still remain unclear because any impact on Iranian oil facilities could have a far reaching effect on the overall global setup for equities, not only India. And India, because of its huge dependence on oil imports, obviously gets impacted more. So it's an uncertain scenario. We should remain cautious, let the markets settle down further, and see how it plays out over the next couple of weeks.
Sandeep, what's the take when it comes to dmart? Very mixed brokerage view coming in post the kind of Q2 update. Do you actually believe that Q-commerce could play spoil sport to a dmart in the long run?
So competitive intensity obviously is increasing in the value space, but I think it's more I think economy related slowdown. And when slowdown reaches the discount sellers, sort of like DMart, that actually indicates significant stress on the consumer's balance sheet, like pockets. So I think it's concerning because it has wide ranging ramifications on what's happening on the overall consumer sentiments, especially given the quarterly updates we saw from a few other consumer companies also. So we need to watch out how things play out, whether there's some recovery on the uh, festival season side. But the economy clearly seems to be slowing down. And as such, DMart, obviously, the valuations remain excessive. They have been excessive always, but they look even more expensive now, given the growth slowdown. So I would think that there's not much upside in this stock from the current levels.
Sandeep, I was asking you about Reliance, whether after that, the fall that you had in the stock yesterday, the fact that it's sub its 200 DMA, would you at least be looking at nibbling into the stock right away?
I think it's more to do with the overall selling by foreign investors, which could continue, I think, over the next couple of weeks also. And to that extent, given that Reliance has a big weightage in the indices, it actually raised a lot of capital uh, during periods. In its subsidiaries, obviously. But then the point is that the large caps with high weightages will find it very tough to escape when the sell off is so intense. The key is that does the scenario in the Gulf stabilize or not? So if it doesn't, then we could see further downside. So I think it's not stock specific on the large cap side at this stage. I think it's more about uh, more widespread selling, and as the selling gets absorbed domestically, which are the stocks where the domestic institutions are buying more and where they are not, and where they are buying less, those stocks obviously fall more. So it should be a wait and watch at this stage.
Sandeep, today seems like it's going to be a day of stability. But again, would you be looking to sell or book profits anywhere or even deploy cash to buy into anything today? What's the strategy?
No, strategy is to hold around 15% cash because I still believe that the market's going to correct further because markets have just corrected 3-4% from the top. It's not that it's been a deep sell off. Even a normal correction could be 6 to 10% at least, and that will bring a lot of that will take out a lot of froth from the market and bring some amount of valuation comfort also because even at these levels the valuations are much higher than historical valuations at a time when growth seems to be slowing down. So I think it's wait and watch, not looking to increase cash further because I don't think that we are in a market crash kind of scenario, but holding on to the existing cash, expecting better values.
We were just analyzing Tata Motors and M&M and how the pecking order has at least, very swiftly and gradually actually also changed for both M&M as well as Tata Motors. If you can just bring up the 52-week charts for both these and compare the two, M&M, of course, is seeing some renewed vigor after Mahindra Thar Rocks got that 1.76 lakh bookings within just 60 minutes of its opening. There you go. M&M has surged up about almost 100%. Tata Motors, pretty much half of that. A little less than 50% of an uptick is what the stock has seen in the last 52 weeks. So clearly a winner here when it comes to M&M. Sandeep, brokerages as well have been quite impressed with the Thar Rock's booking numbers that we've seen in just the first few minutes. A clear winner here has overtaken Tata Motors. But would you say after this dust really settles in the market, you would actually deploy more to Tata Motors as opposed to M&M? Or do you think this is a significant leadership change and M&M will continue to be number one for a while?
We exited out of Tata Motors around 1100 plus levels after the last quarter updates, etc. And mainly because on the GLR issues where growth was slowing down and there could have been margin impacts. On top of that, now we are also seeing domestically, uh, because of a lack of new models, etc., their domestic sales are also faltering. And the CV sector also, despite expectation of some sort of revival, is not doing so well. So the story for Tata Motors in the near term seems to be hazy, and as such, I'm not looking to buy Tata Motors again immediately. However, if the stock does end up correcting substantially, then we could take a look. M&M continues to do well, so we hold on to M&M. I'm not buying at these prices, but I see no reason to sell because the company is doing very well, and there's a potential revival cycle which could play out in the tractors also post good monsoons and improved farm incomes.
In your take, Sandeep, on the news that now Swiggy has got the shareholder approval to increase their IPO size to 5,000 crore rupees. And this coming at a time when we have seen a lot of new age companies really make big moves in the quick commerce space. Your thoughts?
So I think it's better always that the company tries to raise more as a primary issuance rather than a secondary sell-off by investors. And most companies are trying to leverage the market condition, the huge buoyancy in the IPO markets to try and IPO at these levels. However, Swiggy financials are very different from that of Zomato, where Zomato's moved into profitability. Swiggy still continues to be under deep losses. And to that extent, investors need to evaluate what value can be given because at the IPO valuation or the valuation which has been done by some existing investor, which came in the papers yesterday at around $13 billion, which is more than a lakh of crores, and Swiggy continues to make a loss of 2,500 crores a year. So, at what should be the right valuation? When will they actually end up making a 2,500 crore profit? Even at those levels, it will be 40 plus earnings. So, I think the valuations are a bit out of whack in this market today, and we need to see like IPOs are getting absorbed very easily, but longer term performance and sustenance is the question.
Meantime, what about your take, Sandeep, when it comes to Coforge? You've got that stock as well that's in the spotlight. JP Morgan has maintained its overweight stance and they've upped the target price as well. They believe that there's going to be some consolidation and that they increase the earnings by about 15 to 20% over FY25 to 27. Do you track the company and what else is looking promising as we approach earnings season for IT?
Yeah, IT stocks, all of us know, have done very well over the last 3 months in anticipation of demand recovery. So now we need to see whether that recovery is actually playing out. Like upgrading stocks, upgrading earnings just before the earnings season is starting is somewhat strange. So I think it's very tough to predict. So we need to see what's happening, because the global disruption, global slow, like there are a lot of events happening. So it's not very clear whether this discretionary spending uptick, which is being talked of, is actually going to play out in the numbers of the IT companies. So I would be cautious on this space till we hear from the companies, which will happen over the next 2 weeks.
Right, that's the view coming in. A little bit cautious when it comes to the entire IT basket. Some of the other newsmakers that we'll be watching out for today, M&M Finance, it's been in line and a bit mixed in terms of the Q2 updates. Disbursements are down, and you've got the collection efficiency that's remained quite constant at about 96%. And you've got Alembic Pharma that has received the US FDA nod for one OTC, and Shilpa Medicare as well, where the subsidiary has got the CEP for an API drug. So those are some of the stocks as well that are in the spotlight. And then, of course, you've got the Q2 operational updates from the likes of Bajaj Finance, Bajaj Housing, as well as M&M Finance, as we highlighted. Curious to get in your take, Sandeep, as to how you're reading into these operational updates and what it's signaling. For instance, Dabur was a big disappointment.
Yeah, so I think that's what I was talking of earlier, that many of the updates from these consumer companies indicate some sort of slowdown, because many of these companies put out inventories in the hope of a revival in consumer demand, which did not play out, and many are adjusting those inventories. Even the disbursement growths of most of the financial companies which have reported till now indicate some sort of slowdown. If you look at HDFC Bank's numbers, it indicates a substantial slowdown in their advanced growth. Same is the case with all the companies which are on the screen. So clearly, all of so it's not one data point. Several data points are pointing towards a slowing economy, and as such, if it slows, then whether that leads to an uptick in the NPA levels also or not will be a critical element to watch in the results season this time.
We've discussed the technicals in depth. What is your view on the fundamentals when it comes to Reliance Industries? How should we be reading into this from a news point of view? Is anything incrementally really going to change for them? These fundamentals still seem to be fairly robust.
So I think this quarter on the oil and gas front, obviously it's been very weak because GRMs have been very weak. On top of that, many of the consumer companies updates also indicate slowdown in retail, so that could have an impact on Reliance Retail, etc. So I think there are pressure points on the operational fundamentals of some of the businesses. Now, the key is that eventually they will revive also. But like I said, that uh, in an overall market fall which could extend further, it's very tough to see that Reliance will bounce back while the rest of the market will continue to correct. So I think we need to let the correction play out.
Everything was going good for Vodafone. Debt issues got solved, pricing power was coming back. But despite that, the stock has gone in a tizzy. 20 has become 10.
I have always maintained that there's no equity value in Vodafone Idea because I don't see them coming into profit anytime. Given the fact that even if there's a pricing improvement in the market, they continue to lose customers, and to that extent, it's telecom is all an operating leverage game because your costs tend to be fixed, and the more subscriber or more uh, ARPU you get, you tend to make more money. So that's the main issue, because if a company cannot go into profits, then how can it have any value for equity investors?
I'm just collecting thoughts here from our experts, and the question which we would be asking everyone, and I'll start with you. We asked you this yesterday as well. Let's revisit it. What would I like to buy on this decline of 10 to 15%? So Sandeep, one was Ahluwalia. Which were the other two names?
So Ahluwalia was there. Then I think on the large cap side, what I mentioned, like Kunal also said on Reliance, but I would think lower than what he's saying, maybe 8 to 10% lower. Uh, LNT, Monia 32, 3300. So I think these immediately come to mind, which we could look at buying.
All right, Sandeep, it's been good chatting with you. Thanks for joining in and sharing with us your thoughts. What about the
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.